Resilient has been listed on the JSE since 2002 and owns a portfolio of regional malls and shopping centres, tenanted predominantly by national retailers. It's part of the Capital Properties group of companies. Resilient has a market cap of 14.7 billion rand. So obviously we're going up in size here, and let's just start with the share price graph, considering we're all in position. Again, the pullback that you are referring to, anything else that you want to allude to on the share action?
Well, on the share action, it's really just moved in line with the rest of the sector. There isn't much more to speak around that. But on the company level, Resilient is a very well managed retail portfolio. Fairly sizable market cap. I think it's probably on the higher end, and very strong growth with a very good management team.
I feel a little far from you, so I'm going to step in, and Kundai, I'm going to ask you to take a stand there. From your perspective, Paul, do you have anything, some great information in terms of detail that you can add on this one?
Look, this is the house that Des de Beer built. He's the guy who put it all together, the property manager who pioneered the concept of going outside of the established metropolitan areas. So their properties are things like the Highveld Mall as you go out through Imalahleni heading into the eastern part of the country.
Always know we can count on you for the details.
Secunda Mall, places like that. Sterkspruit, the big mall in Zanin. So these are towns that were seriously run down in the 80s and the 90s. Their retail consisted largely of clapped out main streets with, those ghastly buildings looked like they'd been made out of pressed steel. And they came to these secondary centers with the idea of flash looking malls that were covered, that had all the fresh new national chain stores in them, the Woolworths, the ShopRite Checkers, the CNAs, the exclusive books, the Mug and Beans, the Steers, the Debonairs. I mean, they all look the same.
You can stop now.
They all look the same. You could just about go into the one and think you were in another. They've all got brilliant tiles, great light, all the rest of it.
Don't you want him on your team? This level of detail is amazing.
But I mean, what it did for retail was great, and what it did for sort of commercial prospects in these towns was fabulous, except of course for the people who own the buildings in the main street. But it has revitalized, and it's brought the sort of consumer success story to far corners of the country. And that's what's really done well, because all these national chains have realized that Des and his team really know what they're doing and that these malls will work. So they just sign up whenever he says he's doing a new one.
Are you as enthusiastic about these malls as Paul is?
I am. They've essentially dominated a lot of the towns that he speaks about, and it's a very strong management team on the asset level, very strong on the balance sheet level. We back the guys, and what's quite important on a forward-looking basis is that Resilience development pipeline up until about November this year is around 1.8 billion rand at a yield of between 7 and 10%. Now, that's very attractive for where the stock is and where they funded this development pipeline. So this year we expect them to show 10% odd distribution growth, which is massive given what the sector is doing, around 7%. And once this pipeline is actually finished, that growth number could actually improve from that. So quite positive.
I've got a question to ask.
Go ahead, Paul.
They are doing something with their management contract. So because of the relationship with Capital, they were managing Capital's properties, and they're going to get a stake in Capital in exchange for that. Just explain that stuff for us, because a lot of these companies have been doing these processes where they internalize or externalize the management team from some related party.
Yeah, we spoke about that last time on the show. I think we were speaking about Capital at the time. What happened is that the management company, or the Manco, that used to service Capital was owned by Resilient. Now what's happened is that Capital is internalizing that, so putting it on their balance sheet, buying it from Resilient essentially. We spoke about numbers last time. We said the impact is around 4 million on Capital's earnings. It's a neutral deal. And they do have a stake in Capital.
And what does it mean for Resilient that they get a larger share of Capital in exchange for that historic cash flow from the Manco?
Yes, they get shares in lieu of that. But a bigger impact is that they had valued this Manco on their balance sheet at around 80 million and sold it for around, I forget the number, but close to the 500 million mark. So the NAV impact is pretty big.
Okay.
Are you satisfied?
Sounds good.
Do you have enough information to make a call, hot or not?
Yeah, I think, look, the valuation looks attractive, so I'm fairly keen on all of these because, as you know, I expect that some of the sort of nervousness of markets currently is going to abate.
As all of you know.
And as Kundai says, nice pipeline, keeping the thing rolling, developing new stuff, bringing new stuff on board, refurbishing, adding value, blah, blah, blah. So still keen on this one, still hot on it.
Thank you for the hot. And Kundai, hot or not resilient?
Hot, I like the pipeline, I like the team. It's cheaper than it was a couple of weeks ago. You do pay upfront a little bit, so it still has a strong rating relative to the other stocks in the market. But if you want the certainty and the growth, you get into it. It's hot.
Definitive.